Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday the 16th of August 2020, and yesterday we published our gold and silver weekly update for the weekend in the 14th of August. And if you haven't had an opportunity to listen to that, then we've placed a link in the description box below. Now, at the end of yesterday's video podcast, we promised to comment today on Warren Buffett's declared purchasing of Barrick Gold Corp shares, the result of filings announced after the markets closed on Friday. This resulted in Barrick Gold shares rising over 3.5% in after-hours trading, and has led a number of pumpers to enter the blogosphere, stating this is now living proof that gold is going through the roof. Because after all, buying a gold mining share is taking a leverage position in the commodity itself, and one would only do this if one believed that gold was going to rise considerably. Now, before we comment further on this, let's take a brief look at what both Bloomberg and Reuters published on this very matter. Bloomberg article dated August 14th, 2020. Headline: Warren Buffett sours on banks and likes, gulp, gold. Berkshire Hathaway's only new purchase in the second quarter was Barrick Gold, which doesn't indicate confidence in a quick economic recovery. Dumping bank shares and investing in a gold miner? It certainly doesn't sound like a Warren Buffett move, but that's exactly what the investing guru's company did in the second quarter, according to a regulatory disclosure Friday. It's not a good sign for markets. Buffett, the fifth richest person in the world, has loved few things more in his life than sweets, soda, and compound interest. But banking stocks have come pretty close. Buffett was there to boost them during and after the last crisis, and he's remained a top shareholder in most of the big US banks. That's why it's so jarring that Buffett's Berkshire Hathaway Inc. sold 62% of its stake in JP Morgan Chase & Co. and cut 26% of its Wells Fargo & Co. holdings last period amid the COVID-19 crisis. The conglomerate also pared back positions in other financial services firms, including PNC Financial Services Group Inc., M&T Bank Corp., Bank of New York Mellon Corp., MasterCard Inc., and Visa Inc. Berkshire all but excited Goldman Sachs in the first quarter, in the first of Buffett's worrying signals, and finished the deed in the second. Berkshire also did away with its leftover airline positions, a move Buffett previously disclosed, and a stake in Burger King parent Restaurant Brands International Inc. Perhaps most telling was that Berkshire's only new purchase was Barrick Gold Corp, a gold mining giant. The stake is now valued at about $605 million, which is still relatively puny as far as Berkshire holdings go. Selling bank stocks when interest rates are low and are expected to stay that way isn't a contrarian idea, but a bet on gold is an act of fear and not something expected from an experienced investor who has ridden out numerous downturns as Buffett has in his nearly 90 years. His milestone birthday is later this month. Buffett has even ridiculed gold holders in the past. Here's a lesson he gave at the May 2018 annual Berkshire investor meeting. Let's say you've taken $10,000 and you listen to the prophets of doom and gloom around you, and you get that constantly throughout your life. And instead you use the $10,000 to buy gold. Now, for your $10,000, you would have been able to buy about 300 ounces of gold. And while the businesses were reinvesting in more plants and new inventions came along, you would get down every year and you look in your safe deposit box. And you'd have your 300 ounces of gold. And you could look at it and you could fondle it and you could, whatever you wanted to do with it. But it didn't produce anything. It was never going to produce anything. And what would you have today? You would have 300 ounces of gold just like you had in March of 1942. Now, Buffett isn't stacking gold bars in his basement, but he's still wagering on the precious metal. Berkshire's top 5 investments remained unchanged: Apple Inc., Bank of America Corp., Coca-Cola Co., American Express Inc., and Kraft Heinz Co. However, it's been buying more Bank of America shares in recent weeks, which are too recent to show up in Friday's filing. Apple now accounts for nearly half the value of Berkshire's $221 billion equity portfolio and is performing much better than Berkshire itself. Buffett used to joke that he's 1/4 Coca-Cola, but he can switch that to Apple now. 2 of Berkshire Hathaway's top stock holdings, Apple and Kraft Heinz, are holding up better than Berkshire itself during the COVID crisis. Now, to be fair, it's not clear who exactly made these investing decisions, a responsibility Buffett shares with Todd Combs and Ted Weschler, his stock-picking deputies. Either way, Berkshire sold about $13 billion of stocks when one would expect Buffett, a stalwart believer in the US economy, to go on a buying spree. It's not as if Berkshire needs the cash. It had a mind-boggling $147 billion as of June. As I wrote last week, it would help in times like these if Buffett held quarterly earnings calls to get a better understanding of his frame of mind. The last time investors heard from him was the virtual shareholding meeting in May, during which he said, "Nothing can stop America." It's not that he doesn't believe that any longer, but these latest moves, hoarding cash and finding gold mining attractive, suggests he sees the crisis lasting longer and perhaps getting worse before it gets better. No one knows whether that will be the case, but Buffett has his finger on the pulse of the economy by way of all the various industries Berkshire operates in, from freight railroads to aeroplane parts, insurance policies to car dealerships, bricks for home construction to fruit-of-the-loom underwear, industrial chemicals to Dairy Queen fast food, jewelry stores to private jets, and much more. For Buffett's big birthday, I had thought he'd want a big acquisition, the elusive elephant he's talked of for so long. But maybe just ship some bullion bars to Omaha instead. Reuters article dated August 14th, 2020. Headline: Berkshire slashes Wells Fargo. JP Morgan stakes. Adds Barrick Gold. Warren Buffett's Berkshire Hathaway Inc. said on Friday it has sold shares of some of the largest US banks, slashing its stakes in Wells Fargo & Co. and JP Morgan Chase & Co. and exiting an investment in Goldman Sachs Group Inc. In a regulatory filing detailing its US-listed investments as of June 30th, please note that, Berkshire also disclosed a new 20.9 million share investment worth $563.6 million in Toronto-based Barrick Gold Corp, one of the world's largest mining companies. Investors monitor Omaha, Nebraska-based Berkshire's quarterly filings to see where Buffett and his portfolio managers, Todd Combs and Ted Weschler, see value. Shares of Barrick have benefited from rising gold prices, which set a record last week and rose 3.2% in after-hours trading following Berkshire's disclosure. Barrick did not immediately respond to a request for comment. Berkshire reduced its Wells Fargo stake by 26% in the quarter to 237.6 million shares. Since early 2018, Berkshire has shed more than half of its Wells Fargo shares, which were once worth $32 billion, but lost value as the bank was hurt by scandals for mistreating customers. Buffett first invested in Wells Fargo in 1989. Berkshire also reduced by 62% its stake in JP Morgan, where Combs is a director, to 22.2 million shares and shed its remaining 1.9 million Goldman shares. Buffett has not given up on the banking industry after telling investors in May that banks were well capitalized and capable of weathering the coronavirus pandemic. Berkshire still invests in several banks, including Bank of America Corp, where in the last month it invested more than $2 billion, giving it an 11.9% stake worth more than $27 billion. In Friday's filing, Berkshire said it also exited its investments in Toronto-based restaurants brand International Inc., the parent of Burger King and Tim Hortons. Berkshire also has more than 90 operating units, including the Geico car insurer, BNSF Railroad, and Dairy Queen ice cream. End of article. Okay, the move is indeed positive for gold prices moving forward, as Buffett has, in fairness, tended to avoid buying gold in the past, or certainly the recent past, usually because, he declares, due to a lack of dividend and growth. Now, having said that, by buying certain gold shares, he can have the best of both worlds, a dividend from the company and gold price appreciation resulting in share price increases. So it makes sense. Now we have to be careful, because whilst $500 million or so sounds like a fortune, to Buffett it's really small fry. However, we did say to note that the filing only covered share dealings up to the 30th of June. And of course it is indeed possible for Buffett to have made a further acquisition of Barrick shares since then, and potentially other mining shares. We won't know that until the next filing is due. What it does show, however, is a decreasing confidence of Buffett in the United States and global economy, and a degree of switching to defensive gold. What no one can evaluate, though, is to what extent others may follow suit. Of course, there is no question that Buffett has his disciples and followers, and a number of these may indeed take a similar position. We've stated over the past 12 to 18 months the increasing trend of financial advisors now beginning to recommend to clients to hedge their portfolios with an investment in gold. It's possible that this is what Buffett is doing. With his fund estimated at around $200 billion, of which apparently some $137 billion has recently been held in cash, a $500 million investment in gold only represents 1/400th of the portfolio. So it really is a relatively minuscule amount. Now, if, as we used to advise clients in the past when we were in that business, he adopted what we suggested, which was between 5 and 10% of their portfolio into gold, then this investment would have to rise from the current $500 million to as much as $10 billion to $20 billion. And that truly would send a very clear message to the markets. So the investment is encouraging and may even cause others to follow. But we would need to see a more significant investment before we would declare that Buffett is really that serious about gold. Now, of course, whether he is or isn't doesn't necessarily make him right. What do you think? Do share your thoughts. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.